First rates then on your screen so far, defending the 19,500 print, but yes, a 0.5% dip. That's pretty much par for the course. The market breadth as well is a little bit challenged this morning, although you are seeing a relative outperformance as opposed to what's happening within the large caps from the broader end of the market. The Nifty bank also starts off a little bit softish in trade, but first let's start by talking about what's happening within the FMCG pack, because those are the big giants which came out with their numbers post-market hours. That's Unilever in trade for you. The numbers were largely above estimates to a little bit in line. The margins have actually risen by about 690 basis points. But no, you're not seeing much excitement on Unilever. 2508 is where that stock is. What about ITC? That was definitely a better performance. Healthy Q2 internals, cigarette volumes were a beat at about 6%. FMCG revenues as well showed good growth. And of course, the hotel segment, because of its low base on a year-on-year basis, that was also quite a bit of jump up. But no, not much excitement either on ITC. 448, so pretty lukewarm response to its numbers. Jindal Stainless, the Q2 numbers have been in line. Cyient, their EBIT margins have come in flattish on a sequential basis, but the EBIT has risen about almost 5%. Metro Brands, we were just chatting with the management. EBITDA has jumped up about 5.6%, revenue uptick of about 17%. Very marginal move coming in there from Metro Brands as well. And then, of course, I want to check in on what Havells is up to also, because the Q2 numbers look a little bit below estimates to in line. Havells, though, starts off flattish in trade. Emphasis also came out with its numbers. The constant currency revenue has been flat. Deal wins at about $255 million odd, 1% higher for Emphasis as we speak. And then UBL also came out with their numbers. The numbers, of course, are a little bit below estimates, but UBL has gapped up 3.25% there. Voltas, let's check in on that also, because there has been quite a bit of margin pressure. EBITDA has come in down by about 30%. Voltas down about 1.25% as we speak. And Tata Communications also came out with their numbers. Again, the numbers haven't matched up to what the street was expecting. 2% lower for Tata Com as we speak right now. What's Zomato up to? You just had that block deal take place. And then, of course, the Blinkit performance as well. Zomato has covered its losses. 112 is where that stock is. Also want to check in for a follow-through on a Hero MotoCorp, on a Bajaj Auto and an LTIM. And after that big breakout on most of these names, you're not quite seeing a follow-through come by, at least not on Hero MotoCorp. Bajaj Auto starts off flat. And LTIM sees some more uptick of about almost 0.5%. Actually, it's not all that bad. We're skirting around the 19,550 mark, Kunal, and a fairly resilient broader market.
Absolutely. I think, so the indices are doing one thing altogether, but the broader market, the opportunity to trade is also pretty much high. The stocks are seeing a follow-through even after a breakout or, positive close, maybe yesterday or day before. So I think that's a very good sign that the market breadth is still very, positive as such. So I would probably be looking out for more mid-cap names and, smaller cap stocks. Paytm is something which looks attractive as an opening trade. The stock is trading at 955, 960 odd mark. It's confirmed a swing breakout on the short-term charts. Would be something which I'll keep an eye on, especially on the opening trade.
All right, that's the view coming in on Paytm. Meantime, taking a look at the overall market move this morning, Naresh, what are your key takeaways with the fact that we are around the 19,550 mark, and what would be the first trade that you punch in?
So the key takeaways, we continue to see broader outperformance. The Nifty small cap 100 is just 70 points away from a new all-time high. It did hit it 2 days back, so we are not seeing much of a correction in the broader markets. So time to remain stock specific till the time we don't break 19,300. On the stock side, ACC looks like a good risk reward trade here at 2020, 2030.
Okay, Kunal, Naresh, we'll see you again later on in this show. So not looking all that bad given the kind of jitters that you were seeing from across the globe, given the fact that you had an elevated yield at 5% for the first time since 2007 and all that hawkish Fed commentary. We're not looking all that bad at 19,557. Of course, it remains to be seen whether we stay put at these levels for the better part of today's trading session or not. For now, at least, the start has been good.